Good evening, friends. Welcome to my channel, Trading Nifty in Rules and Setup. Friends, the previous day the market performed exactly the way that I had mentioned. I could not trade because of some other pre-commitments, but that's okay. Now let's look into the way how market should perform or is expected to perform on Monday. So friends, what I've done is that I make my notes on the previous day of the trading. So this is the Nifty analysis for the month of September 2022 and then the monthly analysis. Now, if you see the monthly analysis, the market on Friday has taken support from 17,291 and the 38.2% Fibonacci level is at 17,297. So it took support from the Fibonacci 38.2%. The next downward level for the market is therefore Fibonacci 50%, which is at and around 16,893. Now, friends, the market has a monthly support at 17,154. Therefore, the max upside for the market would be, as per the Fibonacci, at 17,470. So, what I see the range for this month and this week can be a max low of 16,900 and a max high of 17,500. This is a very broader range for if I want to sell options, then I will sell 17,500 call and I will sell 16,900 put. Now, what is the weekly analysis? Since this is the last week of the month, as such, there is no difference between the monthly and the weekly analysis. Now let's come to the daily analysis. Now, friends, this is the chart. If you see here, there are multiple gaps in the daily chart. And normally, the market comes to fill these gaps. And I have shaded all these gaps in the chart. You can also shade these gaps. The nearest gap is between 17,018 and 16,947. And there is a high probability that it may come to fill this gap this week itself. Also, the market has hit two of the MSM support, that is the minor, strong, and the major support. Sorry, it has hit two of the support, that is minor and strong support. Now, minor support on 4th of August at 17,161, strong support on the 29th of August at 17,166, and the expected next support can be 26th of September on 17,170. Why this number of 17,170? See, friends, on the 1st of August, the market made a low of 17,155. Then on the 4th of August, it made a low of 17,161. And further, on the 29th of August, it made a low of 17,166. Now, 17,155 minus 17,166 is 6 points. Then 17,161 and 17,166 is 5 points. As such, it is expected that the next low would be 4 points. So 6, 5, and 4. That's a trend. So it's expected that the next low would be 4 points higher than the previous support low. Now, if we add 4 points to 17,166, then it comes to 17,170. As such, is my level of 17,170. Now, between 29th of August and 26th of September, the time is 29 days, which is also close to the Gann date of 30. So the dates of 26th September and 27th September is critical. On such dates, the market takes a reversal, being short term for the 30-day Gann date. Further, Monday is normally a trending market and not a sideways market. Now let's look into the data. Friends, It's a scary data. So retailers net index positions, index and option position log 7.77 lakhs, 72 lakhs. FIs 3.2 lakhs short, pros 3.5 lakhs short. Frankly, I have not seen such level of polarization. So the retailers are extremely bullish, while the pros and FIIs are completely bearish. But these numbers also show a super compressed and oversold territory and wants us to be careful on the big bearish side. I said warns us to be careful on the bearish side. A further compression of the market, if it must happen, then the market has to give some release. The spring has reached a level of max compression. On simple English terms, this means that some gas needs to be released. If the market has to go down further, the stomach is full. Therefore, now what all of you wait for? The main question is how to trade tomorrow and what would be my setup plan. Friends, this is only my setup, and what I'm sharing with you is purely my setup. Scenario 1. If the market opens gap up above 100 points, the retailers who have gone bullish would start to book their profits. And the smart money, FII and the pro would be in loss, so they would want to bring the market down. This phenomenon would then lead to volatility. I am not interested in such a fight between FIIs, pros and the retailers, since I do not have any position in the market. As such, if the market opens gap up, I shall just close the terminal and not take any position for the day. Friends, remember, a money not lost is a money saved. This is from my experience that I'm telling you. After losing lots and lots of money, I can tell you that had I not lost the money, then I would have saved that amount of money. So friends, a money lost is a money saved. Scenario 2. If the market opens flat plus minus 50 points below 17,380, if the market opens flat meaning below 17,380, then with SL of 17,380, I shall take a put with a target of 17,300, 17, not 300, so 17,150. 150. Why? Sorry, 17,150. Why am I saying this? Because if the market opens flat, then it is the second scenario for the smart money, and they can capitalize more on the downside. Here, I shall take a 17,600 put, which is deep in the money, which would be available around 300 with a SL of 30 points in options. If my SL is hit, then I should close my target. My target would be at least 150 points in index. Scenario 3. If the market opens gap down near and above 17,150, this is Chummeshwari scenario, as Himesh Reshamia says. In such a scenario, I shall wait for the market to touch 17,170, and at this point I shall deploy 50% of my capital to buy 16,800 call. Yes, 16,800 call, or a call which is available around rupees 300. Then shall wait and see if the market is coming further down. If the market is coming down till 17,150, then at 17,150, I shall average the same call with the balance 50% of the capital to be deployed. At this point, I shall on average price, on the average buy price, put an SL of 28 points in option, which is equal to approximately 40 points in index. This means that if the market goes below 17,130, then my SL would be hit and I shall close my terminal. Target for this position will be 17. Yes, the target for this position would be 17,297. So if I'm taking a call at an average of 17, between the average of 17,150 and 17,170, then the target for this particular position would be 17,297, where I should book my profits. If there is any other scenario other than the above three scenarios, then I shall not be taking a trade tomorrow. This is a promise on the feet of my Guruji, and I shall not break the promise that I make to my Guruji, since whenever I have done that, I have made substantial losses. Thank you, friends. If you like what I am doing, before that, this is my trade setup for tomorrow. This channel I have drawn, my SL I have kept, my support I have kept. So I'm ready for tomorrow, and I will trade only as per my setup. Friends, if you like what I'm doing, I'm spending a substantial quantum of time in analyzing the market and giving you the best. Please like, subscribe, and comment on my channel. Kindly share this among your friends. Friends, also this particular Word document would be available in my Telegram channel, the link of which is mentioned in my description box. You are free to forward this to anybody you want. Thank you so much, friends. Cheers, sayonara, and bye-bye.